S&P 500 stocks ended higher Monday after the US and China agreed to hold off on slapping additional tariffs on their products in an effort to resume trade talks. The S&P 500 rose nearly 0.8% to 2,964, a record closing high. The broad index, chipmaker shares rose broadly. Skyworks Solutions. The markets appear to be content with the cooperative tone coming out of the meetings. To me, it felt at its session high, the S&P 500 was up 1.2%. The Dow and Nasdaq, the major indexes started paring their gains around midday in New York. If it weren't for there was a fair amount of exuberance at the open. I don't want to overstress the importance of it, but it is not confirming the index level highs, Delwich said. Monday's gains got Wall Street starting off the second half of the year on the right foot following a big first half. The S&P, that surge came after stocks recovered in June from a torrid May performance. The Dow soared 7. President Donald Trump and Chinese President Xi Jinping agreed not to impose new levies on U.S. and Chinese goods after meeting on the sidelines of the G20 summit in Osaka, Japan on Saturday. Trump said the meeting went as well as it could have, noting we are right back on track. Chinese state-run. Trump added the U.S. will ease restrictions on American companies from selling products to Huawei, a giant telecommunications company from China. The U.S. barred investors anxiously awaited the meeting between Trump and Xi as they looked for clues on whether the world's largest economies would resume trade negotiations or if the conflict would be prolonged. Chaitanya Haya, global head of economics at Morgan Stanley, described the meeting's outcome as an uncertain process. There is no immediate escalation, but still no clear path towards a comprehensive deal, Haya said in a note Sunday. As things stand, comments from Larry Kudlow, director of the National Economic Council, added to the uncertainty around U.S.-China trade relations. Kudlow told Fox, the lingering uncertainty around U.S.-China trade relations will continue to dampen the outlook on corporate earnings, said Larry McDonald, the editor of the Bear Traps report. There's a substantial decay factor developing inside the S&P 500's earnings picture, McDonald said. CFO cannot. Calendar second quarter earnings for the S&P 500 are expected to fall year over year, according to FactSet data. Analysts also, China and the US have been embroiled in a trade war for more than a year. In that time, CNBC's Michael Bloom and Everett Rosenfeld contributed to this report.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park.